And for more on all of this and the state of the markets, we bring in T.G. Watkins, Chief Market Analyst at Simpler Trading, and Todd Horwitz, Chief Strategist at Bubba Trading. Thank you so much for joining us. Now, Bubba, here in the U.S., the Trump administration is pitching this roughly $850 billion stimulus package, which would ease some of this economic pain. We're talking about payroll tax cuts. There's a possibility of $1,000 paychecks going out to Americans. That's what Mitt Romney wants. Really, is this going to work, and is it going to actually prop up the economy, Bubba?
Hi, Brent. No, it's not going to work. I mean, it may prop it up for a minute, but people aren't running out to go to the stores now. People are ducking and covering and looking so they don't get sick, okay? So, again, will it help? I mean, it certainly will help people that are very tight on rent and things like that. But everybody's kind of being understanding that, maybe people just can't pay right now. And I don't think anybody's going to go after the consumer and pressure them if they're going to be late on their rent or whatever. So I think this is just another temporary measure that can be taken in. But again, we just like to add more debt. Let's see if we can get this to 30 trillion soon. I mean, it's just another 850 billion. What the heck? It's just, let's pass it on.
And it really does seem odd, because if you're talking about putting money in the hands of Americans, yes, can it help with rent and bills that need to be paid while these people are out of work? But in reality, stimulus measures are supposed to be there to support your small businesses, to prop up the economy that way. And if all these businesses are closed, it's very hard to do that. Now, TG, when we look at these stimulus measures, what are they going to do to actually help the U.S. markets when we look at that?
Yeah, it's going to be really tough to see what's going on. I think a lot of people are waiting to see when the market actually stops going down and turns around a little bit. I know that the government basically is trying to fire a bazooka at the market and say, hey, we're here, we're going to try and put liquidity in. But what we're seeing on Wall Street or Main Street is that just people aren't doing anything. And if we continue to see that events and concerts and airlines and just everybody stops doing everything, I think it's going to make investors a little bit nervous to continue to putting money back into the market if we just see that everything is on hold and on pause right now.
And now, Bubba, I've been waiting for this one for you all day. Now, you said from the beginning the Fed was doing no good to help this problem. And the day after an early rate cut of 1%, markets had their worst day since 1987. Now the Fed has injected $500 billion just Tuesday afternoon into markets. And things are looking a little bit better. But what do you make of the situation with the Fed injecting all these funds?
The Fed is clueless as usual. I mean, look, if they were going to cut, which everybody kind of knew, it was kind of telegraphed, why didn't they have their meeting like they were going to have it tomorrow and cut tomorrow? You knew the minute they cut on Sunday that it was a panic move. The Fed choked out and couldn't take the pressure of trying to facilitate the markets, which again, if you let markets trade, if you let everything trade free, then you don't have these issues. But when you continue to try to manipulate, I mean, the whole entire move has backfired on them. Just take a look at the U.S. dollar. I mean, they're trying to keep the dollar under pressure, and here the dollar is once again trying to push up against par. So they've shown that they have a lack of knowledge of how a market works and how a free market works, and instead of letting price discovery happen and work, because the markets will find a level, whether it's, whatever price level they want, and whether it's 2% interest rates, 1%, 0, 3%, we know that the markets can handle and the system can handle higher rates, because you have all these peer-to-peer lenders and not subprime, but lesser lenders that are lending like crazy. And what are they doing? They're turning around and selling those notes back to the banks so the banks can once again over leveraged, and of course that will eventually come out and say we're over leveraged and there's a problem. Okay, and this is what they do all the time. But again, you keep giving that free money and give them free access to the repo window, don't make them pay, and all of a sudden you end up in a problem, because all the people that are selling these subprime loans or these lesser loans are selling them and picking up 2 to 3 to 4 basis points just for facilitating the loan with no risk. I mean, what kind of business is that?
Absolutely. And now, TG, I wanted to talk about some other market metrics that we're looking at. The volatility index topped where it was during our last financial crisis in 2008, 2009. Now the VIX more than doubled so far just in the month of March. You were a trader. Do traders have actually any confidence in markets, and what can we expect in the coming weeks and months?
Well, yes, us as traders, we like to see what's happening as far as confidence of the market. We know that eventually it will come back, but I've gotten a lot of phone calls recently from people who know what I do, and they're saying, hey, is now the time to buy because everything's so cheap? And I always tell them the thing about you don't want to try and catch a falling knife. Right now, we're still going down. We're still under major moving averages. If we talk about the Fed coming in and trying to add this liquidity, sure, I think it might hold the market for a little bit. I am looking for a bounce at some point just because the market is so oversold. It can continue to get oversold. The volatility is so high, it's likely to come back down at some point. But what I'm concerned about is that any kind of bounce, any kind of drift that we get back up is really going to be an overall reversion to the mean and start running into these downtrending moving averages, and we might roll over again after that. Most of the times what we're looking for is a retest of lows, and right now we still haven't even put in the first low, and that's what we're looking for, is something to come later.
Todd Horowitz and T.G. Watkins, thank you both so much for your time. Good to spend hours on this.
Thanks, Brian.
Hey.